Hello, everyone. My name is Gretta Fenner. I'm the Managing Director of the Basel Institute on Governance, and I'm very, very pleased to welcome you to this webinar, which is at the occasion of the launch of the 12th edition of the Basel AML Index, the index version 2023. I'm very, very pleased that we have so many of you attending online. That's one of the positive sides of what we learned during the pandemic, that we do have this possibility of getting together and discussing topics as important as AML CFT with people from all sorts of time zones and countries and jurisdictions. Because ultimately, when it comes to fighting money laundering and terrorism financing, it is a global endeavor. So having people from all over the world join us for the launch today is really fantastic. Very briefly, a few housekeeping remarks. We have the seminar set up to last 75 minutes. We will have first a presentation of the key findings of the 2023 Basel AML Index by Kateryna Boguslavska, who is our Mrs. Basel AML Index at the Basel Institute on Governance and has been that for many years. And then we will follow this with a panel discussion with a wonderful group of experts that I will introduce in a second, to delve a little bit into some of the trends, but also some of the specific findings and thematic issues that we look at when it comes to progress or not so much progress in fighting money laundering and terrorism financing. Second housekeeping remark is that please, if you have any questions, don't wait until the end. You're welcome to type them into the Q&A box that you can see at the bottom of your Zoom screen, and I will do my best to monitor it on an ongoing basis. Depending on how many questions, we will not be able to address them all, but I will certainly try to pick out as many as we can during the Q&A session at the end of the webinar. With that, let me first introduce the panelists, although it will be Katja to speak first. I've already said who Katja is, and I think many of you who've engaged with the Basel Institute on the issue of AML CFT probably know Katja very well. Suffice to say, she really is doing every year a brilliant job bringing a product that I proudly can say is really positively influencing, I think, global efforts to combat money laundering and terrorism financing. And then on our panel, in no order of particular preference, we do have Nico Di Gabriele, who is not yet with us, but will join us in a minute. So he gets the privilege of being mentioned first without being here yet. He is a senior team leader at the European Central Bank. We have Alan Ketley, who is the executive secretary of the Wolfsberg Group. We have Roberto De Michele, who is the division chief for state capacity at the Inter-American Development Bank. We have Dr. Joseph Pojgai Alvarez, who is an associate professor at the School of Human Sciences in Osaka, Japan. And last but not least, we have Malcolm Wright, who is head of regulatory at OKX, which I haven't found out what it stands for, but I know what it is. It's a global virtual asset exchange. I will not say much more because I'm really keen to hear what Katja has to say, and I'm sure you all are too. So I will hand over to Katja, please, for your introduction to what is the 2023 edition, telling us about how good we are when it comes to combating money laundering and terrorism financing. Katja, please.
Thank you, and welcome to the launch of the public edition of the Basel AML Index 2023. Let's start with what is the Basel AML Index. So the Basel AML Index is an independent research-based ranking of money laundering and terrorist financing risks around the world. The index was first published in 2012, and this is the 12th public edition of the Basel AML Index. It is a composite index based on data from 18 publicly available sources, such as Financial Action Task Force, Trace Bribery Risk Matrix, Transparency International, World Bank, World Economic Forum, Freedom House, Rule of Law Index, and others. The risk scores cover 5 domains considered to contribute to the high risk of money laundering and terrorist financing: The first domain is on quality of AML CFT framework. The second domain covers issues of bribery and corruption. The third domain is on financial transparency and standards. The fourth one is on public transparency and accountability. And the last but not least, domain number 5, covers legal and political risks. This year, the last data collection was conducted in September 2023. Thus, any updates in indicators after this date are not covered. What is new this year? Let's look at the methodological changes. The methodology of the Basel AML Index is reviewed annually to ensure that it remains accurate and reflective of current MLTF risks. This year, the Basel AML Index adopted very important methodological changes to reflect the progress that countries reached to be graduated from the FATF grey list. Currently, the countries are not re-rated in terms of their effectiveness, even after being removed from the grey list. To remedy this, in Basel AML Index, we assumed that jurisdictions that have graduated from the grey list have improved the effectiveness of their AML CFT systems to at least a moderate level. This is reflected in the improved scores for 17 countries as of September 2023. What else do we have this year? This year, the country coverage of the public edition is increased with a record of 25 new jurisdictions to a total number of 152 jurisdictions. Thus, it is very important to use the score of the country for looking for comparative purposes rather than the rank, although we do constantly warn against superficial comparison from year to year in any case. Let's look at the main finding of this year. The average global MLTF risk increased from 5.25 in 2022 to 5.31 in 2023, where 10 is the maximum risk. Risk increased in 4 of the 5 main domains: corruption and bribery, financial and public transparency, political and legal risks. Scores for the quality of AML CFT framework for countries remain static. What else do we find is that effectiveness of MLTF measures dropped from 30% to 28% in the last 2 years. Among the least effective areas are the misuse of non-profit organizations for terrorist financing purposes, transparency of beneficial ownership, supervision, prosecution, confiscations, and measures to prevent the proliferation of weapons of mass destruction. Many of these areas are also problematic in terms of compliance. This year, we focus our attention on 3 specific topics: misuse of non-for-profit organizations for terrorist financing purposes, new technologies, and confiscations. Let us start with the first. And it is about non-for-profit organizations. Meeting FATF standards on non-profit organization is a major problem globally, according to our analysis of FATF data used in the Basel AML Index. The average score globally for technical compliance with recommendation 8 is just 41%, and it is the lowest level out of all 40 other recommendations. Many countries do badly in terms of both technical compliance and effectiveness. The average effectiveness score for immediate outcome 10 is 25%, and that is lower than global average for effectiveness. The annual report looks at the reasons behind poor performance, regional variations, and recommendations on how to do better. Specific attention is focused on the unintended consequences of application of the FATF standards to non-for-profit organizations without proper risk-based approach. We will talk about some of those later in our panel discussion. The second focus area this year is on cryptocurrencies or virtual assets. Average global performance in terms of technical compliance is 43%. This is the second lowest after the non-for-profit sector. During the last 2 years, the compliance level dropped by almost 20%. Only 12.5% of jurisdictions are evaluated as compliant, but many more are non-compliant. Despite low countries' performance, we see some reasons to be optimistic. The first reason is that regulations are becoming stronger and more harmonized in the world's major financial centers. And the example here is the new market in crypto assets regulations in the EU. The second reason is that initial enforcement successes pointed at the huge potential to trace illicit financial flows and recover stolen assets. We will hear more about this in our panel discussion. The last focus is on confiscation of illicit assets. At the moment, based on the data from United Nations Office of Drugs and Crime, countries intercept and recover less than 1% of the global illicit financial flows. So we decided to look at what is holding countries back. And the answer is, it's not much the lack of laws or legal instruments, but more a failure to implement them effectively. Data from FATF evaluations show that most jurisdictions do have sufficient legal instrument to confiscate illicit assets. The average score for technical compliance is 76%, which is above average. No jurisdictions are assessed as non-compliant. In terms of mutual legal assistance requests on freezing and confiscation of illicit assets, countries are doing less well, but not too badly, at least on paper. The average score here is 66%, which is just above the average of 65. But how effective are these in practice? Many countries have the necessarily legal instruments to confiscate more illicit assets, but are not putting them into practice. The average global effectiveness in immediate outcome aid is 28%. Only 3% of jurisdictions demonstrate a high level of effectiveness. The annual report looked at the reasons behind poor effectiveness and the ways how countries can do better. The report, including regional profiles, are available on our website. Please take a look and contact us if you have any queries. Before I stop, I just want to make an important note. The 12th edition and report refer to the public edition. It is just one subscription type of subscription that we have. We really encourage you to look at our expert edition and expert edition plus subscriptions. They are reasonably priced for the private sector and free of charge for practically everyone else, including journalists. The expert edition allows you to explore regional, global trends, developments, and to do a more in-depth analysis of individual countries, regions, or risk factors. This year, we introduced a new feature to the Expert Edition Plus subscribers. This is an approach to predict and understand risks of specific jurisdictions of being placed on the FATF grey list. Please check out the options on our website and don't hesitate to contact me if you have any questions. Thank you for your attention.
Thank you very much, Katja, for distilling a lot of content into a short presentation. I think it's just whet some people's appetites, and I can maybe ask you, while we're starting the panel discussion, to have a look at some of the questions that came in while you were speaking. One of them related to Venezuela that has had, for example, an FATF evaluation, but currently is not on the grey list. So I think this refers to what you were talking about just now. how to work out which elements may lead to a higher risk in terms of being grey listed and so on and so forth. But I think what you said is just causing a lot more questions to come forward, which is fantastic. It means that we have a lot of attendants who listen to the presentations. I'll start now with our panelists, and I'm really delighted we have such a rich group of academics, regulators, bankers, a really good group of people joining us. And I think it'll be very interesting to hear your view. And perhaps, Malcolm, if I can start with you, because virtual currency is still sort of, the hot topic, and therefore I'd like to test you on something that Katja has mentioned. We've seen that compliance with the FATF standards is falling when it comes to the recommendations that concern virtual assets, but we also notice some areas where we feel maybe there is, grounds for cautious optimism. Now, I'm going to ask you perhaps more from the perspective of your previous job when you were a regulator of virtual assets in the UAE. As we said, now you work for a private virtual asset exchange. Can you help us maybe interpret this kind of slightly bizarre picture? Where do you see sort of globally the biggest issues in relation to virtual assets, and are we doing enough to regulate and control this beast, which some people think is the greatest invention since sliced bread, and others think it's the modern form of devil? So I'd be curious how you interpret that.
Okay, thank you, Greta, and thank you to the Basel Institute on Governance, to Hans-Peter, to Katja, to yourself, Greta, for the invitation to be speaking today. You are right, it is a complex picture. The updated recommendation 15, FATF recommendation 15, which included the virtual asset recommendations, was actually ratified in 2019, but the mutual evaluation assessing compliance didn't begin until a couple of years later. So until then, recommendation 15 compliance was evaluated, but not in that context of virtual assets. Thus, the data is still quite small to say, okay, we can draw the long-term conclusions, but it does provide us with some great clarity and transparency on really what's happening in the last 2 years, and gives us that helpful baseline to assess going forwards. All of this said, the FATF has expressed, and particularly this year, this urgency to address regulatory gaps, as it sees the growth of virtual asset activity as a potential risk if it's not really properly supervised. I was trying to think about how to explain, and so I'll take the analogy of the airline industry, let's say. So 120 years ago, the Wright brothers, of no relation, launched their first flight, and so air travel was born. And since then, the industry has been continually evolving, sometimes proactively, sometimes reactively due to events. But in both ways, it's really been to enhance safety and comfort for passengers. Regulation also sought to ensure passenger safety, security, and ensuring really responsible players operate well in the marketplace. And so throughout that whole 120 years, evolution has spurred a global industry where planes continue to fly, and that really transformed our ability to live and to work. So if I kind of apply this to the virtual assets, less than 10 years ago, since virtual assets regulation was first discussed, the industry and regulators really sought how to bring rapid change and responsible innovation to the forefront. So you have responsible industry players like OKX, recognizing that clients have to have a safe, transparent, and accountable experience with virtual assets, and that this opens the door to financial and economic transformation. Regulators and policymakers are challenged in different ways to grapple the speed at which virtual assets have come to market and this global nature of the industry, and how virtual assets can be similar yet different to these existing market products, and that this technology-centric world may actually be different from the prior experience. And I think this is where public-private partnership, PPP, is really vital, having those conversations. And it's something that the FATF has called upon for the responsible industry players, policymakers, regulators, law enforcement, really to work together and to share that knowledge and ensure that there's this safe and secure virtual asset ecosystems so that the benefits can be felt across all sectors of the economy. So PPP, to my mind, is this key that unlocks this globally aligned approach that can lead to more rapid adoption of regulations, appropriate right-sized regulations, and also to compliance. So we very much value these kinds of partnerships, and there are some regulators who are already proactively outreaching. There's members of the industry who are members of working groups that are reaching out to regulators to offer up support to really build those bridges. And that's, I think, is the key to how we can all collaborate to make a better world. Lastly, I've long discussed sort of an old crimes, new technology approach ever since those sort of early days of fintech. And it's really these responsible innovators that are also aware that there's no room for complacency, and that these solutions have to be consistently built to respond to the threat. The technological solutions are available that allow the virtual asset industry for some distinct advantages to tackle illicit behavior, such as blockchain analytics. Country risk data, such as the Basel AML Index, when combined with some of these technological solutions, it allows for this further granularity towards this highly targeted approach to a risk-based approach and risk management. So, as mentioned before, as you said, there's really this room for optimism, bearing in mind that according to reports, illicit virtual asset activity still represents less than 1% of total virtual asset activity. And this is really small compared to fiat activity. And recovery rates are also higher than that of fiat recovery, due really to the traceability and transparency of those transactions. So we only have to look at some of the seizure rates in the past year, for example. Like in the US, I think it was last year, $1 billion in a single incident that was recovered and seized. So really to sort of sum up, I think we're just seeing a rapid maturity, and that now creates an opportunity for an ever more sound ecosystem. And that's both in terms of responsible innovation from the industry, as well as developments in the regulatory space, and then how those two worlds can come together and work together to really produce the outcomes that we would like to see.
Super, thanks so much, Malcolm. This is for me, as many others, still a relatively new world. I'm embarrassed to admit, but in a way, that's also what you're saying. You know, it's too early to call. This hasn't been, this is a 10-year industry at best, in some ways. And I think that you're saying we're going in the right direction. Let's hope we make it as safe as flying, which still is the safest way of transport, really, even safer than walking on your own feet, apparently. And so if we can make that happen for virtual currency, I'd certainly encourage that. And as the Basel Institute, if there's one thing we always support, it's collective action, that's for sure. So let's make that happen from day one. And actually with collective action, I'm moving over to Alan, because he is representing one of the world's first global collective action initiatives in the space of AML CFT, of course, with the Wolfsberg Group. So it's really great to have you, Alan, here. I'd like to bring you to the second area that Katja pointed out as being perhaps the second worst performer in the global comparison in 2023, and that relates to preventing the misuse of nonprofit organizations for terrorism financing, a topic that was, for very sad reasons, a lot in the news recently in particular. There's always this challenge of regulating this sector and preventing it from being misused, but also taking too heavy-handed an approach to implementing these standards so that very well-intended charitable organizations who are just there to bring food to the people who suffer from whatever bad they're going through, that we're blocking these organizations from operating effectively. I know that I think the Wolfsberg Group also provided some comments to the FATF in a consultation on this matter. So it'd be really interesting to hear your perspective on this issue, Alan, and what are perhaps some of the Wolfsberg's comments made or recommendations in this regard to try to find the right balance between, preventing misuse, but also preventing unnecessary hurdles for good organizations.
Thank you, Greta, and thank you to the Institute for the opportunity to participate. So I'm going to start out with a somewhat contrarian comment. I do not understand why NPOs warrant a FATF recommendation solely around terrorist financing abuse. NPOs are vulnerable to all sorts of money laundering and corruption types of risk. And it just puzzles me as to why we have the focus on terrorist financing. I think it comes down to some specific point in time issues with some specific geographies, but I do think a broader view of the risks posed and not posed by NPOs would be appropriate. So FATF has recognized that there have been all sorts of unintended consequences around attempting to regulate and oversee the NPO sector. And I think that started out with some perhaps rather poorly worded regulatory pronouncements that led the industry to conclude that the regulators viewed all NPOs as high risk. That, of course, had consequences in terms of due diligence, in terms of de-risking, in terms of general inquiries, and an issue that I'll lump together and call friction. So FATF has recognized that there are these issues. They're in the process of updating Recommendation 8 and its interpretive note. We understand that was discussed at the plenary in October, just last month, and that it may be ready for publication soon. The thing that I think is more interesting around what the FATF is doing is that they're recognizing this unintended consequences issue more explicitly, and they're going to be publishing a best practices guide. Some have referred to this as a worst practices guide, in the sense that FATF will be highlighting what has worked well and what hasn't worked well in an attempt to steer the industry and the regulatory community away from the unintended consequences and more to a more risk-based focus around this sector. I think, we probably all know, but it warrants saying that the vast majority of non-profit organizations have a minimal exposure to terrorist finance risk. So, as you pointed out, we submitted a response to the consultation, and you never know how the FATF is going to respond to that. One of the things we always do after we've done a response to a consultation and a revised document comes out, we take a look and say, okay, what did we suggest and what did they incorporate? And sometimes we ask ourselves whether really was the time we spent suggesting warranted with what they incorporated. So you never know, but you can see our response to the consultation on our website. But there are a couple of things that I think are worth highlighting in what we said. Recommendation 8 says a lot about countries should assess the risk of NPO exposure. We think that NPOs should assess their risk of exposure. And we think by doing so, the conversations that they will have with their actual or potential financial services providers will be better. Because as a bank, the last thing you want to deal with is a customer that doesn't have any idea of what sort of risks it faces. We think that under certain circumstances, NPOs should conduct some kind of due diligence on their donors. The comparison is not an exact one, but if you think about correspondent banking, which involves a bank banking with another bank, facilitating the movement of funds from third parties to other third parties, NPOs do something that looks a little bit like that. And at a meeting in Vienna earlier this year, we sat down with some of the NPOs, and they were saying, we collect money from anonymous donors and we send it to high-risk jurisdictions to help people. And I made the point that that's, when you look at money laundering risk, you're talking about sources and uses of funds, and they have to be readily explainable. And the last point I'd mention is that we really do need to do collectively a better job of making sure that expectations are clearer. The banks need to do a better job of explaining why they're asking for the information that they ask for. And the NPOs need to connect all the dots, because there's a real danger that the group at the NPO that is responsible for getting and maintaining the bank account might be a different group within the NPO that receives questions about the nature of transactions. And unless those two groups or two people are talking to each other, there's a chance that they will miss key risk indicators.
Thank you, Alan. That was a really interesting answer, I have to say. And I think, NPOs being themselves aware of the risks of being misused, because we're primarily looking at those NPOs who are misused. We're not looking at these NPOs that have been established, to do bad things. Their self-assessment's not going to lead to much. But, those very good organizations who may get into trouble because they're being misused for the wrong purposes, I think an understanding there. And it's quite interesting because increasingly, literally in the last few months, and I don't know exactly where it's coming from, I've had quite a few foundations and not-for-profit, international, mid-sized not-for-profits who came to me and said, could you help us look at some of our risks and compliance, both corruption, money laundering. So I think that awareness is starting to build, and I think it chimes with very much what you and the Wolfsberg Group were suggesting as well. I'm turning to you, Nico, and you're the European Central Bank. I mean, not you all on your own, but you represent it. So we're going to look at Europe for a second, if we could. We noted problems when it comes to the EU regional space. In particular, again, I should say, in relation to supervision of financial institutions, which was a weakness for a couple of years, in particular with payment institutions. And we also continue to see issues with regard to effectiveness of measures to prevent money laundering and terrorism financing. So I'd be quite curious to see, how did you react to these findings? Did you say like, yeah, I know, it's a big problem and we're working on it? Or did you say that really doesn't chime at all with with my experience, and basically, where do you see sort of the next steps taking the EU forward in this space, please, Nico?
Yeah, Greta, thank you very much for inviting, and also the Basel Institute. You raised a few topics that are very important, not only for my institution, but for me personally, because I am very much committed to make our environment a safer one. The EU, despite being a single market, is not, in certain areas, still very homogeneous. And one of these is, unfortunately, anti-money laundering and countering the financing of terrorism. The European Commission supranational risk assessment time and again reminds us that the picture we have in front of us is quite a scattered one. We have countries and sectors where there is a tremendous need for improvement, but next to them, thanks to God, I will say, there are member states where both preventative measures and supervision have been appropriately tuned. Moving from this premise, the Commission in June 2021 presented an ambitious plan for a complete overhaul of the regulatory framework in the Union. For people that are not familiar, in the Union, we have still legislation in the field of AML brought by the legal instrument of the directive. Directives are not immediately applicable at member state level. They have to be transposed. The single rule book the Commission presented is made by different pieces. One of them is a regulation, and the regulation is more powerful than a directive because it is immediately applicable. Let me mention a few problems that this plan with the regulation is going to solve. First, an example. In July 23, EBA reported that in 9 member states, competent authorities believed that tax-related crimes are not relevant. They explained that tax crime is not a predicate offense for money laundering, and they were not competent to take action in this regard. Next to this, it emerges from the supranational risk assessment that AML supervision is not always commensurate with perceived level of risks. And unfortunately, institutions in some sectors and member states remain largely unsupervised. This gives us the full sense of the problem. But conscious of this, the Commission proposed to have, under the regulation, the customer due diligence. So customer due diligence will be fully homogeneous, union-wide. The Commission proposed to have a single AML supervisor at EU level, in charge of the direct supervision of a few entities in different sectors, from banking to insurance to payment institutions, and in charge of the indirect supervision of national competent authorities. So even for entities that remain at national level in terms of supervision, the EU supervisor will be able to scrutinize the quality of the supervision that will be conducted at national level. Under the regulation, there will be rules to address the problem of transaction monitoring. It emerges from a report of the European Banking Authority that for the time being is the only EU-wide IML regulator with some investigative powers, that the transaction monitoring and reporting of suspicious transactions are rated as poor or very poor by between 30 and 50% of competent authorities. You mentioned payment institutions. This, unfortunately, is an area where there is a tremendous need for improvements because, for instance, authorization practices, meaning the process to grant the license, is not harmonized. And furthermore, there is not a EU-level common approach to the supervision of agent networks. This weakness should be duly considered in light of the known abuses through virtual IBANs, and many virtual IBANs are distributed by payment institutions agents. However, it will not be fair avoiding to mention that, as I anticipated, there are several member states where both obliged entities and supervisory authorities have put in place the adequate measures to tackle financial crime. But their effort will be vanished because money is lesser and lesser constrained by borders. And as the colleague earlier mentioned, crypto assets are borderless by nature, and bad actors could easily exploit that. Just a few days ago, the Financial Times published an article describing how, in a member state, firms managing crypto asset ATMs are not obliged entities for IML purposes, and what the attitude that at least one of these companies has vis-à-vis IML CFT. But as a prudential supervisor, I can bring with first-hand experience that an area where we have dramatically improved is the cooperation between IML supervisors and prudential supervisors as the ECB. Not a few years ago, the then chair of the supervisory board of the ECB said that we were in a very difficult situation because we didn't receive the information we needed to properly assess the adequateness of the risk control of banks in terms of IML. Now we are not there. We have moved ahead because the cooperation has improved both in terms of frequency and quality. IML colleges have been established. 229 IML colleges have been established union-wide. And now prudential supervisors are better placed to receive information and also to submit information to IML supervisors. We have a wide network that exchanges pieces of information. And let me mention one other aspect. Prudential supervisors are mandated to consider money laundering risk when performing the assessment of credit process at banks. Because credit process is the key business of banks, you may understand how intrusive this is. And in July this year, the Council decided that under a forthcoming directive, violations of the EU economic sanctions will constitute a criminal offense in the EU, thus bringing to a commonplace the practices in terms of determining compliance with sanctions. But as I said, the most important measures are going to come in the near future. In the coming weeks, there will be the decision on where the EU single IML supervisor will be headquartered. Let me conclude with, let's say, a comment that is more personal, but I think that it will be shared by many. The true game changer in the fight to financial crime is not regulation. but ensuring that only people with high moral compass are in charge at financial institutions, that the ethical bar is always kept high. Our society should not tolerate that people with tainted reputation hold key roles at financial institutions, and we supervisors have to play a role in this, because we should not tolerate that people get the license to become directors and key function holders when they do not deserve that.
That's a very good point, Nico, you made there at the end, and I think we all wish we had only people with high ethical standards in these jobs. I think it's fair to say that a lot of people do have high ethical standards, but unfortunately, as always, those who don't really diminish the reputation and therefore also the business opportunity for the others. I think it was interesting to hear from you. I mean, the gist of what you were talking about, if I have to bring it down to really one point, is that it's hard work to harmonize across even an economic space that's relatively homogenous as the European Union compared to the rest of the world. And yet it's tough. And I think it in a way addresses one of the questions asked by one of the participants, Isa Tussar, who said, are there differences between jurisdictions in terms of enacting and enforcing AML legislation, and do these variations not create loopholes? Well, I think the answer is quite simple. Yes, these variations do create these loopholes. And also importantly, I think this is also what we want to show, or one of the messages of the Basel AML Index is really there are, the world's not at the same standard, and these lack of similar level implementations causes problems. And I may take a liberty of also mentioning there was another comment or question to say, how do we address what this participant appears to see as a Western bias? Because of course, a lot of the underlying indices are, World Bank, sort of more, well, World Bank's a global organization, but, nonetheless, organizations who are somewhat in one form or another, the World Economic Forum and so on, associated more with Western, maybe research or policymakers. And it is, of course, a challenge. I think maybe, I'm sure Katja is happy to discuss this either offline, but one of the points we really strongly support in the Basel AML Index is that large financial centers get a higher risk because we take into account in one of the indices the size of the financial center plays quite heavily into the index. So in that sense, at least we try to make sure that a small jurisdiction that doesn't play a huge role in the global financial market doesn't get, in a way, measured exactly by the same standards in an absolute term or in the composite index. And this brings me to the complexity of measuring, and I'm going to turn to Joseph here. It's complicated, and no methodology is perfect when it comes to measuring phenomena like corruption. I can count the apple on my tree in the garden, but really quantifying phenomena like corruption and money laundering, where they're mostly hidden, is perhaps one of the particularly sophisticated and challenging research topics. And you chose it voluntarily. Nobody forced you to choose such a difficult topic, Joseph. So I'd be interested where, you conduct these research seminars and workshops on this topic, sort of, what are the reasons why people ask for this data? Who is asking for this kind of data? What do they use it? And has the lack of sort of more precise data, if that is even one of the findings, been the reason why we're not seeing more progress, or do you feel there is enough data around?
Yes. Thank you, Greta, for having me with you today, and congratulations to the Basel Institute for the new edition of the index. I always say that I refer back to the saying that goes that what gets measured gets done, and so conversely, what doesn't get measured doesn't get done, right? Corruption and money laundering, the measurement of both, they speak to each other very, very well. Because in corruption, especially in today's complex cases that normally span multiple jurisdictions, the fact that corrupt individuals, corrupt politicians are able to engage in the type of activity that they do is because they know that they have an international system that will allow them to extract rent from their jurisdictions and park them somewhere else. And even if they go to jail, eventually at some point when they get free, or for their family members or their cronies, those resources will be available to them, right? And in the same way, when we talk about the measurement of money laundering, the fact that certain jurisdictions are affected by pervasive corruption, then of course, the money comes from somewhere, and very often that comes from corruption and the type of crime that corruption enables, right? So the measurement of the two of them, I consider them to go hand in hand. Now, traditionally, the group that was most interested, at least in basic measurement of corruption, especially those that get represented through international rankings, we could say that they were both national and international, but very different type of players. Nationally, we're talking about individuals that were ready to mobilize support to push for reform. So we're talking about advocates, NGOs, civil society organizations, and the such. And internationally, basically international actors, business actors that were looking for new markets, new ways to be able to assess risk in order to determine both the operative cost of engaging in their activities and any other related risk to them, right? So international rankings provide those two things. However, when it comes to other type of players, specifically decision makers at the local level, at the domestic level, they have expressed concerns several times, and I have talked to them concerning the quality of the data they are getting. It's not so much that they don't believe about the accuracy of the data. The accuracy is not so much in question, although we can also talk about that, but rather about what they can extract from the data in terms of insights. To a certain degree, it does help knowing how your neighbors are doing, how other countries are doing. It helps mobilize support for reformers, and that much is very clear. But when it comes to deciding where to invest that political capital in terms of, okay, so now that we know, for example, that Venezuela is doing, less well than Bolivia, or Peru is doing less well than Chile, or Malaysia is doing less well than Japan, the economy is very large, and the political system is very large as well. So rankings and traditional measurements didn't used to tell us much about what specific institutions or what elements of the problem we needed to target first. So in terms of prioritizing, there wasn't much about it. So domestic actors have been asking for granularity in those terms, specifically public officials. Many public officials now, because the anti-corruption system around the world domestically, meaning in all these jurisdictions, have been growing exponentially over the last 20 years. Now, most countries around the world, especially in the global south, have in one way or another something that we call an anti-corruption agency, for example, right? So we have now the financial resources, the human resources to a certain degree. Now we need to know where the problem is, right? And we also need a way to monitor progress, because we're dealing with a complex issue that will not be resolved in even one electoral cycle. And if we're going to be waiting to resolve the problem of corruption or the problem of money laundering, the population will normally not be as patient with us, right? So we need to be able to short scores to at least show some level of progress in certain elements. And so the question of measurement is really key. I wish we were there already in terms of what is the answer to this need for granularity from different stakeholders. As you know, IACA has been working on that in their new global program on measuring corruption. There's a lot of effort and a lot of interest in tackling this issue, especially in connection to the SDGs, 17.5 in particular, 16.5, sorry, related to reducing corruption in all its forms. So I see a lot of effort in finding a solution to this question. Unfortunately, in general, we are not quite there, but efforts such as the Basel Institute and their work on this money laundering index is certainly, we're working in the right direction. So I'm very optimistic about that.
Fantastic. We like optimistic people, especially in today's world. And I think you pointed to two things. I mean, to many things actually, but it's certainly, we need to make sure we interpret the data carefully. We don't just look at yes, we love to be ranked number 1 to 10, but we need to look at it more carefully. And I think this is really where the Basel AML Index, I hope with the expert edition, provides that kind of information to at least look a bit more carefully, because indeed, as you said, and I think I'm almost kind of automatically shifting to Roberto with this, you know, the index and other forms of measuring are really they're not there to point finger, they're there to inspire positive change, and positive change needs to be more targeted than just saying we are reforming our AML CFT system, because we need to look at what is working, what's not working. So Roberto, you know, that's really what you were trying to do on the Latin American continent, trying to promote intelligent AML CFT reform, if I can put it a bit bluntly. So it'd be very interesting to hear how IADB is maybe using the Basel AML Index, but also possibly other tools that you might want to refer to how that has hopefully positively or in some form or other influenced this kind of work.
Thank you, Greta. Good morning, everyone, and congratulations on issuing this new edition of the index. Good morning to everyone, or good evening or afternoon. I do share with Joseph his optimism. I'll just give you an example. Last week, we organized in Buenos Aires with the EU and the FATF discussion on beneficial ownership, recommendations 24 and 25. And much to my surprise, one of the comments was, did you think we would be discussing this 10 years ago? And the answer was clearly no. And we have made, I believe, substantial progress, not only in fine-tuning the recommendations, but also in measuring what works and what doesn't. I take the point by Alan very clearly, in the sense that some things may not be working as desired, but others may be working in the right direction. And I believe it's a great time to make the fine-tuning and avoid the unintended consequences that some have pointed out. And now going to the practical issue of how countries in Latin America or the bank uses the index as well as other tools. When we design operations, projects for our member countries, one of the key issues is how do we measure success, or how do we measure impact? This is very important to make sure that the technical assistance provided by the bank has a result. And of course, as some have mentioned now, measuring is challenging. It's always challenging. And it's not, as you just said, Greta, about having like a soccer table, who's best and who's not, who's the scorer and who's not. It's about making sure that your political capital and your resources invested in policy reform are going in the right direction. And in many cases, and in many areas, we did not have the right tools or the appropriate tools, at least to have a general overview on what kind of reforms we should be adopting. And thanks to the Basel Governance Institute and other instruments that measure transparency, integrity, anti-corruption, and rule of law, we are now able to better understand what is that we should be doing. Of course, the menu is very large. There are tons of policy reforms that countries should be embarking on. The question is, what gets prioritized? What is more important in jurisdiction A compared to country B? And that is very related to the context. I remember 13, 14 years ago when Paraguay was listed in 2010, 2011 by the FATF. I remember one of the key questions is, can you help us measure the impact of this listing? And we recruited the help of Donato Machandaro, who did an excellent paper 13 years ago about the financial impact for a country being listed by the FATF. So this effort by the Basel Governance Institute is quite aligned with that idea that the bank has been pursuing for more than a decade now. This is to say simply that measuring is a difficult task. This is not something that we will always think, as I believe Joseph is intended to say, mathematically perfect in terms of deciding what is right and what is wrong. But nonetheless, it's a tremendous help in making sure that at least we understand what is the direction we're going. And if you have a time after this conversation going to some of the projects that the bank has helped design in Honduras or in Paraguay, policy-based matrices, where you have conditions for disbursement, you're going to see that the index is cited as one of the sources in which we use to measure in what directions countries should go. Of course, you will also see in those policy matrix that we have not kind of cut and paste the 40 recommendations of the FATF. We have selected deliberately some of the key policy measures that are aligned with the key recommendations. So, for example, beneficial ownership reform is one of the most important ones nowadays, as well as enhancing the capacity to supervise sectors as a nonprofit or volunteer organizations, which in many cases in Latin America and in the region are at higher risk of being used for money laundering or criminal organizations. So in that sense, again, I thank the Basel Governance Institute for this contribution to allowing us to help our member countries better face the challenge of preventing money laundering.
Thank you, Roberta, and we thank the IADB for engaging in this, having, working ourselves in Latin America on quite substantial, especially asset recovery reforms. We can only see where some of the weaknesses are, but also progress have certainly been observed. I have a few questions in the Q&A, and it's going to be very hard to address them all. Some of them take me 5 minutes to read while I'm also listening, so I have to apologize to those who will not get their turn. But Roberta, while I still have you, I think it's an interesting question, and perhaps, please, everyone, feel free to come in. Even Nico, it could be relevant for you as well. One of the questions is, the international AML system may not be suitable for every country. And I'm paraphrasing then, are we comparing Apple with peers, and is that really fair, or should there be a more diversified AML CFT system? I know it's a bit of a challenging question. Who'd like to have a stab at that one, please? Do you want to start, Roberta? Great, thanks.
In our experience, the bank, I believe, is the main international organization providing support on conducting national risk assessments. We have done very large countries like Mexico, but also smaller economies and jurisdictions like Guyana and Suriname. And some of them we do with the IMF or the World Bank or the OAS. And in our experience, the national risk assessment is a key moment where you do the adjustment of making sure how this applies to the local context. If you do not have a robust, in-depth national risk assessment, then of course you may feel that the recommendations are one size fits all, but actually they're not. At the end of the day, the way in which you organize your policy response has to be related very strongly to the quality of your national risk assessment. That's where you decide where your political effort should go in terms of policy decisions. So yes, there may be some considerations that some of the recommendations may be too harsh, if that's the correct term. But at least in our experience, if countries go through this exercise of conducting a solid national risk assessment, then policy reforms are organized according to the capabilities and needs of each country.
Excellent. If anyone, panelists, just raise your hand if you want to come in. I have another challenging one, which I wonder if some of the more tech-savvy people... Oh, Alan, come in, please, if you want to add to this question. I'll come to the complicated one after.
Yeah, I'll take the easy one. So, I mean, building on what Roberto said, I think it's really important that countries and jurisdictions do that assessment, but it then cascades down through the regulatory environment, because if the regulators demonstrate to the regulated sector that they are taking a particular area seriously, not that they never take an area not seriously, but whether they put resources into it, then the regulated sector will also put resources into it. I mean, it's basic human nature. If you know you're being marked closely on something, you're going to pay a lot more attention to it. And I think sometimes that is a connection that gets missed.
Thank you. I think we had Nico had his hand up, but the hand has gone down again. No?
Yes, Greta, thanks. On the question whether or not it is suitable for all countries or not, I would say the following. The money is fungible. The money does not know borders. How could we have different rules for different countries when they are interconnectedness? And Needless to say that anti-financial crime as financial stability is as strong as the weakest link of the network. So when there are countries which applies different rules or have different standards of supervision, this to a certain extent may vanish the effort of countries that could be also on the other side of the globe.
Yeah. Very, very true. I'm going to come to the technology question now. I don't know who wants to take that, but it's an important one, I think. In terms of, the criminals getting more and more sophisticated, we're the usual story, we're always racing behind them, but they somehow seem to run faster than we do. The question of what role today and what role could tomorrow technology play, in particular sort of artificial intelligence, machine learning, and perhaps here also take into account that we shouldn't just have a simple Western bias, but also consider how the same technologies can then be transferred to lower income jurisdictions. I think the banks have done quite a bit when it comes to AI, Alan.
Yes, you're right. There's a lot of cautious excitement around what AI and machine learning can do. I think the banks have to work very closely with their regulators, because the regulators also have to be comfortable with different approaches compared to the tried and true. Tried, certainly, whether it's true or not is another matter, because I think we can raise questions about the effectiveness of existing technologies. But hand in hand with the technology is a broader consideration, and I saw this in one of the questions around data privacy and information sharing. It's going to sound heresy, but to some extent, it doesn't matter how good any individual bank's technology is, because it will only ever be able to see the activity that flows through its bank. Criminals, the smart ones, will try and avoid concentration risk, and they will spread their business around multiple providers, not just banks. So if a bank can detect something, but can then see flows to and from other obliged entities, the ability to have a conversation with those other obliged entities about the shared customer or the shared counterparties can be invaluable in building bigger networks. And I think AI and machine learning offer the promise of being able to do that more efficiently and more effectively.
Thank you, Alan. I'll turn to Joseph, and I was wondering, Malcolm, if you want to come in again at the end also on this question, maybe also virtual currencies, the technology we needed to solve the problems, in fact. Joseph first, please.
Yes, thank you, Greta. I was just thinking that in some aspects where people are really interested in seeing the possibilities of AIs in terms of detection of illicit financial flows, and of course in the topic that I manage the most in terms of detecting corrupt activity, especially in relation of public procurement. And as I see, I mean, there is a lot of interest, but so far the idea is that the blueprints show a lot of potential for the future and potentially in the short term. But the problem is that the raw materials that we have are quite weak because of the amount of information in terms of transaction information, transaction data, and public contracts and so on and so forth. The idea is that traditionally we have used red flags in terms of starting from a theoretical framework to identify based on certain risks that there are variables and indicators, and whenever a contract or a type of a flow triggers a red flag, then we can look at it manually, right? But the idea now using AI is that we can feed it with millions of data points, and it will try to interpret it and identify new patterns of behavior, so that instead of taking maybe a year or a few years until we recognize new patterns of corruption and criminal activity, that AI will be able to identify new patterns as they emerge almost in real time. So that would be the potential of the blueprint. Now, in terms of the raw materials, is that a lot of that depends on good quality data. And that's usually what we don't have, right? Even internationally, just for public procurement, the idea is that there are a number of factors internationally that are trying to inspire countries to standardize the type of data and the level of transparency that they reach. But we're still a few years behind. That, for me at least, that's the way that I see it for now.
Thank you so much, Joseph. Malcolm, did I put you on the spot? Yes, you seem to be
No,
ready to come in.
I'm good to go. Okay, so I think there's a few areas. The virtual asset world is very tech driven. It comes with that very clean data models and very clear, transparent accountability and traceability of transactions, because you can see all of that flow. I think there's several ways in which we can see AI, machine learning really supporting that process of compliance, and not just compliance, but ensuring that it's mitigating those risks of financial crime. So things, for example, like being able to detect fraudulent identity or likeness or through remote non-face-to-face onboarding. How do we manage those risks? And actually being able to look at a large data set and say, this one's the odd one out. And on that point, the anomaly detection around transactions, I think, is very, very clear. That if we know what normal looks like and we can segment that in different ways, then through properly trained AI and machine learning, then we can start to detect those anomalies with more granularity. That, I think, will help us to fight better. In a sense, we already see this. We're already seeing it with some tools. They emerge very much from fraud and being able to do fraud management. So the way in which people use devices, for example, that normally you do this, but now you do something else. It's those kinds of things that now get transported into the transaction monitoring field and so forth. Because in virtual assets, we see large data sets and we have those very clean data models. It does allow us to really be able to interrogate data in a very interesting way. I think, like with Alan, it would be very nice in the future world to be able to say, okay, well, we can do formalized data sharing models and things like that, so that we can actually collaborate better. And that goes back to my PPP at the very beginning, to bring this whole together to really be able to make it a safe and secure ecosystem.
Thank you so much, Malcolm. I'm going to turn to Katya, and then we're going to start maybe a quick lightning round of a final question to you in a second. But I think, Malcolm, what you just said is really, that issue of access to data, and how it's like this split and divide, because many of the key stakeholders in the industry who will play a role in fighting money laundering for data privacy reasons, very strong and important data privacy reasons, of course, cannot speak to each other. A criminal can always talk to his criminal facilitator. So we really sort of like they divide and conquer us by making sure we don't talk to each other too much. So where we can, we need to talk to each other. Katya, you wanted to come on that last question, and then we'll go into the final round.
Thank you. On data, and I have a proved example of how data helped actually, and it's in the area of work of financial intelligence unit. So they, at some point, they started to their work getting suspicious activity reports even in paper form. Then they moved to the automatic form when the obliged entities had to send it in the automatic form. And now they are one step forward. They use automatic analytics to do the first round of the analysis of this report. And in the times where we see constant increase in the number of suspicious activity reports, this is really helpful instrument for them to have and to deal with this mass of information they are getting.
Thank you, Katya. I think that's a really, really good example you gave. One of the challenges, of course, that we always see and I just want to, in a way, address one of the concerns raised in the Q&A here, is that, in many countries where we work, the issue is having access to computer, electricity, load shedding for 12 hours out of the day. So we do need to keep that in mind as well, which shouldn't be used as an excuse for not advancing. But I think as much as we invest in, I always like these questions about technology and AI, but we need to find also solutions and invest just as much money into those countries that will really struggle to adapt these solutions. And I think it's It's great that everyone always wants to talk about technology, but frankly, sometimes we're just happy if we have a clean paper register to start with, and that's also a good starting point. So bringing a bit the globe into the conversation, lightning round. I'm going to point my finger at, no, that's nasty, Roberto first, but the same question to you all. If you had to make one choice of what you want to see happen so that we don't see another decline next year in the Basel AML Index, what is it? What needs to happen?
Easy question. I would ask for two wishes. The first one, increase availability of information to enhance collective action. I'm not sure if we all recognize that one of the trends in the last decade has been the openness of the FATF and other standard setters to discuss more broadly how the rules are set, how they're measured, what's their impact, and what has to be corrected. So very important to keep up information sharing for collective action. Second, it's a double wish. Do update your national risk assessment periodically. Make sure that you produce statistical information that is relevant. And if I had a last wish, is make sure we create beneficial ownership registries that are powerful, that can help us trace the real owners behind the assets. Thank you.
Thank you, Roberto. I subscribe to all of them, of course. How about Nico? We go with you next, please. Same question.
Yes, from my side, I would say that, at least from a European perspective, because the topic of beneficial owners has been already mentioned by Roberto, I have to say that what is key is the timely approval of the single rule book by the co-legislator, especially before the end of the term of the current parliament in June 24. This is the wish I do have, and I think that it may bring a lot of benefits. Although the legislation does not kicks in immediately, it has a strong signaling power.
How about we write this all on our little letter to Santa Claus and hope that he does bring it before the end of the year, those at least who celebrate Christmas with a Santa Claus. Malcolm, how about from your end of the world?
Oh, I shall return back to collaboration. So having the industry, the virtual asset industry, come together with policymakers, with regulators, with FIUs, with law enforcement, to really look at how do we solve some of these issues. How do we build right fit regulation? How do we really support making the ecosystem secure and safe for everybody?
Seconded, nice. Joseph? Thanks, very yes, appreciate it.
If earlier I was optimistic, I think that this question will make me flip. And with a fear of sounding like a beauty pageant contestant, I normally consider that political instability is fertile ground for all sorts of criminal activity, because as our national priorities shift, all of a sudden there's not enough popular pressure for governments to do things, even follow the letter of the law. Something that your report found in this edition and very much highlighted is that the problem is not the legal framework, because in many cases the legal framework already exists. The problem is effectiveness, meaning enforcement. So if I had one wish, and perhaps it's something that is beyond all of us, I think that the world needs to calm down a little bit, and we need to get back on track and continue working to fight criminal organizations
who are behind so many of the conflicts and the political instability that the world has to deal with. Thank you, Joseph, for the big picture, bringing us into the world comment. Alan, last but certainly not least.
So going last, I'll start off by saying everything that everybody else has said. But obliged entities have been filing ever-increasing number of suspicious transaction reports year by year. And over the last 20 years. And while I think that's led to greater awareness of financial crime, I don't think it's done much to reduce it. So I think we need to rethink the approach. We need to pivot from more to better. We need to focus on outcomes. We need to be looking at the life cycle from crime to activity to conviction, because there's no point in obliged entities giving law enforcement suspicious transaction reports that law enforcement isn't interested in working on. So this also leads to priorities. We need better feedback from law enforcement. You know, what was useful, what wasn't useful. Take a look at the Wolfsberg effectiveness papers for a bit more information. We also need to agree on what we all think a risk-based approach means, because we all use the language, but I think we all use it differently. And generally, it's used to justify why more should be done, and very rarely establishing where less could be done.
Yeah, I think that's a trend we've been watching sadly over the last few years. I would certainly support that. So I think we know where to go. We need to work together, surprisingly. We need to be transparent and communicative with each other so that the collaboration can work. We need to really understand risks and base our responses on risks, on an intelligent use of the terminology of risk, because that leads to not more, but to better answers focused on outcomes. And it also confirms what was just said, indeed, that the value chain doesn't quite arrive at the intended end, because one of the other things our report has pointed to is the very weak performance across the globe in terms of confiscation. So it's very lovely that banks try to detect the virtual asset exchanges, are looking at criminality and all that, but it somehow doesn't seem to end at a confiscation. And confiscation ultimately is the biggest prevention tool there could potentially be, and a deterrent. So we need to work better at strengthening this chain. Listen, thank you everyone so very much for having been here with us for the launch of the 2023 Basel AML Index. It's been very exciting, and I think we've only touched on the surface, but certainly been so much inspiration for thinking further. A very special thanks to my team, and in particular Kateryna Boguslavska, for the fantastic work she's doing. Go to our website, apply for the expert edition. That's where you find the granular data. It's free of charge for everyone except the for-profit companies. Everyone gets it for free. Otherwise, it's really worth it. Use the data to progress on AML CFT collectively for the next 12 months. And we'll see you at next year's 2024 edition launch. Thank you so much. Have a wonderful day.